Right, what you see there is the return histogram of Oracle, okay, well-known stock. And there's several points I want to make on this. First of all, historical prices do not necessarily guarantee they will repeat themselves into the future. This tells us not actually what happened, what could have happened based on the statistical movements of the prices. Now, the most important things I want to draw to your attention are this. Look over the 20-day period. Could have been as bad as minus 30%. Highly unlikely, as you can see. The number of rolling 20-day periods over which it's down 30% is limited. And we're taking 2 years worth of data here. So you could argue, well, why didn't you take 30 years worth of data? Well, I think what happened in 1990 isn't that relevant to today. And why didn't you take even 5 years worth of data? Okay. That's the first thing. Now, look at this, 250 days. This is what people mean when they say hold for the long term. Well, actually, they get it wrong. First of all, it's what you hold that matters. If you're holding something rubbish, then holding for the long term is actually just like holding a brick to the bottom of the ocean and not letting go. The second point is for the long term. What do they mean by long term? Well, the world moves pretty quickly. Okay, as Ferris Bueller once said, 250 days I think would be enough, which is one working year. So I'd look at that. And why do they say hold for the long term in a quality stock for 12 months like this? Well, if you can overcome that, then you might get to this. If history repeats itself, it never repeats itself. All right, and the worst case becomes -3. Hopefully you end up somewhere there. Now, that's not to say this is what's going to happen with Oracle, other than to say something relatively useless, which it'll be somewhere probably between those two ranges. Well, that doesn't help you. Most likely, it'll be in that range. Hopefully, it'll be in that range. But you're going to have to get through this. Most people will panic within 20 days if they see it dropping 30%. In fact, I'll probably start getting phone calls saying, hey, my stock's down 30% in 20 days. Or it's not moving in a diagonal line. If it's supposed to get 40% within a year, why does it not do that every single day and just move like this? Well, this shows you what it actually most likely does. Okay, so just wanted to explain to you stock movements and statistics.